What does the term excess refer to in a general insurance policy? A. The total sum insured by the insurer. B. The amount the insurer will pay out in a claim. C. The amount the policyholder must pay before the insurer covers the rest. D. The interest earned on an insurance payout. The correct answer is C. The amount the policyholder must pay before the insurer covers the rest. Explanation. In insurance terminology, excess, also known as a deductible, is the portion of a claim that the policyholder agrees to pay out of pocket before the insurer contributes. For example, if your excess is $500 and your claim is for $3,000, the insurer will pay $2,500. This concept is used to prevent minor or frequent claims and to keep premiums affordable. Source: G2000315. Core insurance terminology. Which of the following best defines the term indemnity in insurance? A. Reward given for remaining claim-free. B. The replacement cost of new items. C. Fixed payment made to beneficiaries regardless of loss. D. Compensation for loss intended to restore the insured to their previous position. The correct answer is D. Compensation for loss intended to restore the insured to their previous position. Explanation. The principle of indemnity ensures that an insured person is compensated to the extent of their actual loss. No more, no less. It prevents the insured from profiting from claim and is cornerstone of general insurance practices. For example, if TV is stolen, the insured would receive compensation equivalent to its value at the time of loss, not new one, unless agreed under replacement value cover. Source: G2000315. Core insurance terminology. In a life insurance policy, who is the policyholder? A. The person nominated to receive the benefit. B. The person whose life is covered by the policy. C. The individual or entity that owns and controls the insurance policy. D. The underwriter assessing the life insurance application. The correct answer is C. The individual or entity that owns and controls the insurance policy. Explanation. The policyholder is the individual or entity who owns the insurance policy. They are responsible for paying the premiums and have the authority to make changes to the policies, such as updating beneficiaries. In life insurance, the policyholder may or may not be the person whose life is insured. Source: G2000315. Definitions and meanings of key terms. Which type of insurance typically uses the terms term life, whole of life, and trauma cover? A. Business insurance. B. Health insurance. C. Life insurance. D. General insurance. The correct answer is C. Life insurance. Explanation. These terms are associated with life insurance products. Term life insurance provides coverage for a specified period. Whole of life insurance covers the insured for their entire life with a payout guaranteed upon death. Trauma insurance pays a lump sum if the insured suffers a specified critical illness such as cancer or stroke. These distinctions help tailor life insurance to individual needs. Source: G2000315. Terminology associated with different insurance categories. What is the role of an underwriter in the insurance process? A. To sell insurance policies directly to the client. B. To determine the legitimacy of a claim. C. To assess risk and decide the terms on which coverage is offered. D. To collect premiums and issue payment receipts. The correct answer is C. To assess risk and decide the terms on which coverage is offered. Explanation. An underwriter evaluates the risk of insuring a person or asset and decides whether to offer insurance and on what terms. This includes determining the premium, policy terms, exclusions, and whether to accept the application at all. Underwriting is crucial to ensuring the insurer maintains financial stability and risk balance. Source: G2000315. Core insurance terminology. Which part of an insurance policy typically lists the coverage amount, insured items, and policy start and end dates? A. Policy Schedule. B. Endorsement page. C. Exclusions and conditions. D. Reinsurance agreement. The correct answer is A. Policy Schedule. Explanation. The policy schedule is a critical part of an insurance contract. It contains personalized details for the insured, including the coverage limits, specific assets insured, sum insured, named insured parties, and effective dates of coverage. Unlike the standard policy wording, which is generic, the schedule is tailored to the individual policyholder. Source: G2000315. Components of an insurance policy. What is the main function of the declarations page in an insurance policy? A. It lists the names and contact details of all employees of the insurer. B. It contains the insurer's legal obligations to reinsurers. C. It outlines the key policy details such as policyholder, coverage period, and premium. D. It provides the glossary of all insurance terms used in the policy. The correct answer is C. It outlines the key policy details such as policyholder, coverage period, and premium explanation. The declarations page, also known as the deck page, is typically the first section of an insurance policy. It summarizes important policy information, including the policyholder's name, the insured asset or individual, coverage dates, the amount insured, sum insured, premiums, and sometimes deductibles. It serves as reference for the core elements of the contract. Source G2000315. Components of an insurance policy. Which of the following best describes the purpose of a product disclosure statement (PDS)? A. Outlines the insurer's obligations to government regulators. B. It lists the medical history requirements for life insurance. C. It explains the key features, benefits, risks, and exclusions of an insurance product in plain language. D. It is confidential document shared only with the underwriter. The correct answer is C. It explains the key features, benefits, risks, and exclusions of an insurance product in plain language explanation. A product disclosure statement (PDS) is a legal document provided by insurers to consumers designed to help them make informed decisions. It clearly outlines what is covered, what is not, how to make a claim, and the costs involved. Lays a requirement under consumer protection laws in jurisdictions like Australia and New Zealand. Source G2000315. Components of an insurance policy. In the insurance industry, what is the role of a claims adjuster? A. To collect premiums from clients and deposit them into trust accounts. B. To assess and verify insurance claims to determine how much the insurer should pay. C. To promote insurance products and generate new leads for brokers. D. To design new insurance products for investment purposes. The correct answer is B. To assess and verify insurance claims to determine how much the insurer should pay. Explanation. A claims adjuster or assessor investigates insurance claims to determine the extent of the insurer's liability. This includes reviewing the policy, interviewing witnesses, inspecting damage or medical reports, and recommending the claim amount. They play a critical role in ensuring fair and accurate payouts to policyholders. Source 000315. Roles and responsibilities in insurance. What does an endorsement on an insurance policy represent? A. A full cancellation of the policy. B. A reduction in the policyholder's excess payment. C. Written amendment that changes the terms of the original policy. D. New insurance policy issued after claim is paid. The correct answer is C. A written amendment that changes the terms of the original policy. Explanation. An endorsement, also known as a rider or policy amendment, is a formal addition or change to the original terms of an insurance policy. It can add, restrict, or modify coverage. For example, adding flood cover to a standard home insurance policy may require an endorsement. These ensure the policy reflects the specific needs of the policyholder. Source G2000315. Components of an insurance policy. Which of the following best describes the role of an insurance advisor? A. To assess claims and calculate payouts. B. To underwrite policies for high-risk clients. C. To provide reinsurance services to insurers. D. To provide clients with recommendations and advice tailored to their insurance needs. The correct answer is D. To provide clients with recommendations and advice tailored to their insurance needs. Explanation. An insurance advisor helps clients select the right insurance products based on their personal or business needs. Unlike brokers who often act on behalf of clients in a transactional manner, advisors may be tied to specific providers or be independent, but their primary role is to educate, assess needs, and recommend appropriate cover. Their responsibilities include ensuring compliance with regulatory obligations like disclosure and suitability. Source G2000315. Roles and responsibilities in insurance. What is the main responsibility of a reinsurer in the insurance industry? A. To offer specialized advice to clients on life insurance policies. B. To manage a network of claims adjusters in foreign countries. C. To provide insurance coverage to other insurers to help manage risk. D. To assess damage to high-value property during catastrophe claims. The correct answer is C, to provide insurance coverage to other insurers to help manage risk explanation. A reinsurer is a company that insures other insurance companies. This process is called reinsurance, and it allows primary insurers to protect themselves against large or unexpected losses by spreading risk. Reinsurers help maintain financial stability in the insurance market, especially in high-risk or catastrophic scenarios like earthquakes. Large-scale liability claims. Source: G2000315. Roles and responsibilities in insurance. Which of the following best describes a moral hazard in insurance? A. A situation where a person changes their behavior because they are insured. B. The likelihood of natural disasters in a geographic region. C. The physical characteristics of a property that increase the chance of a claim. D. A type of claim involving bodily injury to a third party. The correct answer is A situation where a person changes their behavior because they are insured. Explanation: a moral hazard occurs when an individual takes greater risks because they know they are protected by insurance. For example, someone with full car insurance might drive more carelessly knowing that damages would be covered. It relates to attitudes and behaviors rather than physical conditions, making it difficult for insurers to measure. But underwriting. Source: G2000315. Risk and underwriting terminology. What is the primary role of a loss adjuster in the claims process? A. To assess the underwriting risk before a policy is issued. B. To approve life insurance policies on behalf of reinsurers. C. To sell new policies to existing clients after a claim. D. To evaluate and quantify damage or loss and assist in claim settlement. The correct answer is D. To evaluate and quantify damage or loss and assist in claim settlement. Explanation: a loss adjuster is an independent professional appointed by the insurer or sometimes the claimant to inspect, investigate, and assess the extent of a loss or damage after a claim is lodged. Their role includes validating the claim, estimating repair or replacement costs, and ensuring that settlement is fair and in line with the policy terms. Source: G2000315. Claims-related terminology. What is the difference between a standard and a substandard risk in underwriting? A. Substandard risk receives low premiums due to fewer health concerns. B. Standard risk refers to uninsurable applicants with serious risks. C. Standard risk applicants meet normal underwriting guidelines, while substandard ones present higher than average risk. D. Substandard risk always results in automatic policy rejection. The correct answer is C. Standard risk applicants meet normal underwriting guidelines, while substandard ones present higher than average risk. Explanation: a standard risk is considered average and meets the insurer's typical underwriting guidelines, qualifying for standard rates. Substandard risk represents higher than average chance of claim due to factors like health, occupation, or lifestyle. These applicants may still be insured but often face higher exclusions or limited coverage. Source: G2000315. Risk and underwriting terminology. A third-party claim involves which of the following? A. The insured making a claim against their own policy for personal loss. B. An unrelated individual or entity making a claim for damage caused by the insured. C. An insurance advisor lodging a claim on behalf of the underwriter. D. A coinsured party requesting changes to the policy schedule. The correct answer is B. An unrelated individual or entity making a claim for damage caused by the insured. Explanation: a third-party claim is filed by someone who is not the policyholder but has suffered damage or loss caused by the policyholder, common in liability and motor insurance. This could involve someone injured in a car accident making a claim against the at-fault driver's insurer. This contrasts with first-party claims where they seeks compensation from their own policy. Source: G2000315. Claims-related terminology. Which term refers to the amount of potential damage or loss an insured person or asset is subject to? A. Exposure. B. Underwriting. C. Hazard. D. Endorsement. The correct answer is A. Exposure. Explanation: exposure refers to the degree of risk or potential loss faced by an individual, property, or business. For instance, someone living in a flood-prone area has a high exposure to flood risk. Insurers assess exposure during underwriting to determine coverage terms and premiums. Is one of the foundational concepts in risk assessment. Source: G2000315. Risk and terminology. Which principle requires both the insurer and the insured to act honestly and disclose all material facts? A. Indemnity. B. Subrogation. C. Proximate cause. D. Utmost good faith. The correct answer is A. Utmost good faith explanation. The principle of utmost good faith, uberimi fide, obligates both parties in an insurance contract to disclose all material facts truthfully. This includes any information that could affect the insurer's decision to provide coverage or determine the premium. Failure to disclose such facts may lead to the policy being voided. Source: GE2000315. Legal terms. Insurance context. Insurable interest must exist at which point for general insurance policies: A. At the time of the claim. B. At the time of application and claim. C. At the time the policy is cancelled. D. At the time the premium is paid. The correct answer is A. At the time of the claim explanation. In general insurance, the insured must have an insurable interest at the time of the loss, meaning they would suffer a financial loss if the insured event occurred. For example, you can only claim on a car insurance policy if you owned or had a financial stake in the car when it was damaged or stolen. Source: GE2000315. Legal terms in insurance context. In insurance, what is subrogation? A. A waiver issued to cover policy gaps. B. The right of the insured to receive double compensation. C. The insurer's right to recover costs from a third party after paying a claim. D. A reinsurance arrangement between two insurers. The correct answer is C. The insurer's right to recover costs from a third party after paying a claim. Explanation. Subrogation allows an insurer to step into the insured's legal position to recover costs from third party who caused the loss. For instance, if an insurer pays for damages caused by negligent third party, it can sue that third party to recover the payout. This prevents double compensation and ensures fairness. Source: GE2000315. Contribution and subrogation. What does the loss ratio indicate in an insurance company's financials? A. The ratio of total claims paid to underwriting expenses. B. The ratio of administrative expenses to investment income. C. The percentage of premiums used to cover claims. D. The capital reserve required to meet long-term liabilities. The correct answer is C. The percentage of premiums used to cover claims. Explanation. The loss ratio is a key performance metric calculated as loss ratio equals incurred claims earned premiums x 100. It shows what percentage of premiums are used to pay claims. High loss ratio may indicate poor underwriting performance, while very low one may suggest overpricing or underutilization of coverage. Source: G00315. Financial terms related to insurance. Who is responsible for calculating insurance premiums, reserves, and assessing long-term financial risks? A. Claims adjuster. B. Broker. C. Reinsurer. D. Actuary. The correct answer is D. Actuary. Explanation. An actuary uses mathematics, statistics, and financial theory to evaluate future risks and determine the pricing of insurance products. Reserving and capital adequacy. They play a vital role in both the design and sustainability of insurance operations, particularly in life and health insurance. Source: G0000315. Financial terms related to insurance. Why is it important to avoid technical jargon when communicating with clients? A. It demonstrates the advisor's expertise and professionalism. B. Clients expect industry terminology to be used at all times. C. It ensures compliance with anti-money laundering laws. D. It helps clients better understand their insurance policies and make informed decisions. The correct answer is D. It helps clients better understand their insurance policies and make informed decisions. Explanation. Using plain language instead of jargon improves clarity and transparency. Clients are more likely to understand the nature, benefits, and limitations of their policies, leading to better decision-making and increased trust. Misunderstanding due to technical language can result in disputes, non-compliance, or claims being denied. Source: G0000315. Communicating with clients using appropriate terminology. When completing a proposal form for a new insurance policy, what is the most important requirement? A. Use abbreviations to save space. B. Only answer questions that apply to life insurance. C. Disclose all material facts truthfully and completely. D. Leave sections blank if the client is unsure. The correct answer is C. Disclose all material facts truthfully and completely. Explanation. The proposal form is a legal document and forms the basis of the insurance contract. The client must disclose all material facts honestly and accurately, even if not directly asked. This supports the principle of utmost good faith and ensures the insurer can assess the risk fairly. False or omitted information can void the policy. Source: GE2000315. Documentation and terminology use in practice. What is the role of the Financial Markets Authority (FMA) in New Zealand's financial services industry? A. To provide funding for insurance startups. B. To handle consumer claims and complaints directly. C. To regulate financial service providers and enforce financial market laws. D. To issue personal insurance licenses to individual clients. The correct answer is C. To regulate financial service providers and enforce financial market laws. Explanation: the FMA is the regulator of New Zealand's financial markets. It oversees compliance with legislation, including the Financial Markets Conduct Act and EFSLA, and ensures that financial service providers act with integrity, transparency, and in the best interests of clients. The FMA also enforces licensing and obligations. Source: G2000315. Regulatory and compliance-related terminology. Which of the following is a key requirement of a financial advice provider? FAP under the FSLA. A. Providing fixed-term investment guarantees. B. Offering only insurance products. C. Being licensed and complying with the Code of Conduct. D. Delegating all responsibilities to unlicensed staff. The correct answer is C. Being licensed and complying with the Code of Conduct. Explanation: under the Financial Services Legislation Amendment Act (FSLA), a financial advice provider (FAP) must be licensed to provide financial advice services. FAPs must comply with obligations under the Code of Professional Conduct, including acting with integrity, putting client interests first, and ensuring their advisors are competent and supervised. Source: 000315. Regulatory and compliance-related terminology. Why is it important for insurance professionals to use accurate and consistent terminology in written communication and advice? A. To reduce the length of documents for client convenience. B. To ensure clients always accept the insurance recommendations. C. To ensure clarity, regulatory compliance, and avoid misunderstandings. D. To impress clients with industry-specific vocabulary. The correct answer is C. To ensure clarity, regulatory compliance, and avoid misunderstandings. Explanation: consistent and correct use of terminology in documentation and reports helps maintain clarity, professionalism, and legal accuracy. It also ensures compliance with industry regulations and reduces the risk of misinterpretation that could lead to disputes, incorrect advice, or rejected claims. Source: G000015. Documentation and terminology use in practice. Under the Code of Professional Conduct for Financial Advice Services, what is a core obligation for all advisors? A. Recommending the most expensive policy to ensure full coverage. B. Acting in the best interests of the client when providing financial advice. C. Avoiding written documentation unless requested by the client. D. Only advising on products from one provider. The correct answer is B. Acting in the best interests of the client when providing financial advice. Explanation: the Code of Conduct enforced under the FSLA in New Zealand requires financial advisors to prioritize the client's interests, give advice that is suitable for the client's needs, and communicate clearly. This includes disclosing any conflicts of interest and ensuring the client understands the advice and products offered. Source: G000315. Regulatory and compliance-related terminology. Which of the following is the best example of translating complex insurance terminology into plain language when speaking with a client? A. Your sum insured will be adjusted based on indemnity value per the policy schedule. B. You are protected under standard non-indemnified floating rider policy. C. Your policy pays to replace your items with similar ones if they're damaged or stolen. D. Your excess will be indexed using actuarial standards each policy term. The correct answer is C. Your policy pays to replace your items with similar ones if they're damaged or stolen. Explanation: using plain language helps clients understand insurance coverage and responsibilities. Instead of using technical terms like indemnity or policy schedule, advisors should simplify the concept, such as explaining how replacement coverage works. This improves client comprehension and satisfaction and supports the Code of Professional Conduct duty to act in the client's best interest. Source: G2000315. Communicating with clients using appropriate terminology. What is the primary purpose of the Financial Services Legislation Amendment Act (FSLA) in New Zealand? A. To regulate the provision of financial advice and ensure consumers receive fair, transparent, and competent service. B. To provide government-funded insurance for all citizens. C. To restrict financial advisors from operating outside major cities. D. To set fixed pricing for all insurance products in the market. The correct answer is A. To regulate the provision of financial advice and ensure consumers receive fair, transparent, and competent service. Explanation. The FSLA came into force to improve the regulation of financial advice services in New Zealand. It establishes a licensing regime for financial advice providers (FAPs) and ensures advisors meet conduct, disclosure, and competence standards. Its goal is to increase public trust and protect consumers by promoting advice that is transparent, fair, and in the client's best interest. Source: G000315. Regulatory and compliance-related terminology.